Imagine waking up and AI has already done this for you. It checked traffic and picked the fastest way to school. It made a newsfeed just for you with stock tips. It even caught someone trying to steal your card before you noticed. This isn't the future, this is 2026. AI is now part of everyday life and makes everything easier and smarter. For adults at work, AI helps write emails and sums up long reports in seconds. That gives people more time to do more things. For doctors, AI finds problems faster, makes treatments that fit each patient, and identifies early warnings that save money and save lives. And for us students, AI explains hard math like a great tutor.
This everyday magic is exploding into one of the biggest profit engines in history. The global AI market is projected to hit 350 billion in 2026 alone, racing towards 2.5 trillion by the early 2030s. Companies building the tech behind it are seeing massive revenue surges from AI infrastructure, tools, and services. It's creating new jobs, boosting productivity, and adding trillions to the global economy. This isn't hype, it's happening now, and it's just getting started. The demand for the super advanced chips and machines that power AI, it's off the charts, which brings us to why we're so excited about ASML, the only company on Earth that builds the machines needed to make the chips that power AI. Hi, I'm Nick Debus,
I'm Henry Manciu.
and we are analysts from Kennon McMillan High School near Pittsburgh, Pennsylvania.
We're rating ASML a buy with a 15.3% upside. Its current share price is 1406.61 and our target share price is 1623.
ASML is a large cap company with a $548 billion market cap. Its forward PE of 40.5x isn't cheap, but it's reasonable for a company with 50.5% return on equity. That's one of the highest ROEs in the sector, showing how efficiently ASML turns equity into profits.
Dividend yield is modest at 0.63%, but the real return comes from growth and buybacks. With ASML's EUV monopoly and AI tailwinds, this is a buy.
ASML is the only company in the world that builds the super precise machines needed to make the most advanced computer chips, the ones powering AI, phones, and data centers.
ASML made about $39 billion in revenue last year. About 75% of that comes from selling the machines themselves. The star is their high-end extreme ultraviolet lithography machines, which brought in about $14 billion last year and is critical for making AI chips.
The other 25% comes from recurring services and upgrades on the thousands of machines already out there in factories. This grew 26% last year, has high margins, and provides steady cash flow year after year. The semiconductor industry makes the tiny chips inside almost every electronic device you use, like phones, computers, gaming consoles, and cars. Global sales hit a record $792 billion in 2025, up 26% from the year before. The forecast for 2026 is $975 billion to $1 trillion, and the rocket fuel is AI. High performance AI chips are expected to generate about half of all industry revenue next year, even though far fewer of them are made compared to cheap everyday chips.
To make those advanced chips, you need lithography machines, the precise tools that print tiny circuits. ASML dominates here with a near monopoly in EUV technology. They did $39 billion in revenue in 2025 and project $40 to $46 billion in 2026, all fueled by AI chip demand.
Analysts have called ASML the wide moat king, as it has one of the most unbreakable competitive advantages in the entire technology sector. ASML is often described as a monopoly in the semiconductor manufacturing for EUV lithography. ASML is the only company in the world that can manufacture the machines required to produce the most advanced chips for AI. Chip makers build entire multi-billion-dollar factories around ASML's machines, and switching would require massive redesigns, years of lost output, and billions of dollars. ASML has a huge installed base of machines. The more machines sold, the bigger this base grows. That base creates recurring revenue from high margin services, maintenance, software updates, and upgrades. The more tools out there, the stronger the network.
ASML is strong on the Porter scale. The threat of new entrants is nearly zero because building EUV machines takes decades of research and development and billions in investment. Suppliers have some power, but it's moderate. ASML controls key partners with long-term deals and owns a big stake in their main supplier. Customers can't really bargain hard. There's no alternative to ASML's EUV tech, and switching costs are prohibitive. There are no substitutes for advanced lithography and nearly no direct competition. Nikon and Canon are way behind.
ASML's balance sheet is a fortress. 59 billion in assets, 15.5 billion in cash, and only 3.2 billion in debt. Inventories are at 13.4 billion because they're gearing to ship that massive 45 billion backlog. That backlog is like money in the bank. It's locked in orders from the biggest chip makers chasing AI. Revenue doubled in 5 years, profits up 166%, EPS nearly tripled, revenue doubled over 5 years to 37 billion last year. Net income jumped 166% since 2020, and earnings per share almost tripled. Bottom line, huge cash cushion, tiny debt, and a backlog that guarantees future sales and profits growing faster than revenue.
Our discounted cash flow analysis results in a 15.3% upside of 16.23 per share. Our key assumptions are a 22% revenue growth rate in the first 5 years, a 3.5% terminal growth rate, an 8% discount rate, and increasing cash flows over time. Our DCF is built as a true bull case for ASML. We used a 22% growth rate over the next 5 years because the AI supercycle is driving massive capex from TSMC, Samsung, and Intel.
The 3.5% terminal growth rate is conservative. It assumes ASML keeps growing above the economy forever, thanks to its monopoly and recurring services revenue.
We used an 8% discount rate because this is a fortress business, wide moat, almost no debt and huge backlog. Many analysts use higher rates, but this reflects lower risk in an AI-dominated world.
And look at the cash flow. It's already tripled from 4 billion to 12 billion in just 5 years. That's proof that the business gets more efficient as it scales, which is why cash flow should keep accelerating.
Investment risks. Most of ASML's sales come from only 3 companies, those being Samsung, TSMC, and Intel. If any of these 3 companies have financial issues or delay their orders, ASML sales could drop hard. In terms of the manufacturing process, each one is very complex and takes months to build. Supply chain problems or part shortages can delay deliveries, raise costs, and push revenue to later periods. Finally, worldwide politics could negatively affect ASML through export rules and tariffs. These reasons show that even though ASML is a dominant company in the market, it still comes with investment risks. Everyone's watching the AI chip war, but here's what most people miss. ASML doesn't care who wins the fight. Every single fighter in that ring needs ASML's machines to even step in the ring, no exceptions. Right now, ASML has a $45 billion order backlog that's locked in demand from all the big players racing to outdo each other.
The more they compete, the more advanced chips they need, and the more EUV machines they have to buy. ASML captures that spending no matter who ends up on top. ASML ranks in the top 1 to 5% in the world in ESG scoring. Their machines use less materials, which leads to less waste. ASML puts lots of focus on the well-being of employees and their careers and safety on the job site. ASML offers scholarships for students and donates towards STEM classes in schools. They also follow all regulations and are very transparent in their business and sustainability. That's why ASML is a leader in ESG not only in the semiconductor industry, but globally.
As the exclusive maker of EUV lithography, ASML doesn't just lead the semiconductor industry, it powers the entire future of AI and innovation. As young investors, we are excited to be along for the ride. Thank you.